Hello. Good morning. I hope you're doing well. I hope you had a fantastic weekend. And on this live, I am going to share four reasons why your tax return results, whether it is a liability or you're expecting a refund, why it will be different from your friends on right? Over the weekend, I had a conversation with someone that is a friend, and she told me that, she had a conversation with some of her friends, and she realized that, she often gets a lower refund than our friends' refund. And so we got into the conversation, and so I thought I should come on here to share with you why your numbers will be different from your friends' numbers. Thank you so much for joining Money Mindset MD. Please, can you hear me? Let me know if you can hear me all right. And I'll try to do to be quick on this one. So, but before I go right in, I am Taiwo Agbaje. I am a tax strategist. I'm also a certified public accountant, and I work with private practice medical doctors, real estate investors, and home care agencies to help them strategically and legally save on taxes. If you're joining me, let me know that you're joining, and you can do a wave or just say hello. I want to know that you're with me. And so, like I said, so this is what I'm talking about. A lot of you might be thinking, oh, why is my friend's refund different from my numbers? Why do I owe every year? Or why is my numbers changing every year? And so I wanted to come on here to share some of the reasons why that is the case. So there are four reasons that I'm going to talk about. The first one is your income. Your income determines the tax that you pay. Now, if you are comparing yourself with your friend that is in the lower income tax bracket, there's a high likelihood that their tax liability will be lower, right? So if your tax bill is higher, it might be because you've earned more income during the year. It might also be because you've generated income from your other sources of income. Perhaps you may have a W-2 and you also started a business during the year, or you had multiple W-2 jobs during the year. If that's the case, your income will be high for the year, and your tax liability will also be higher for the year in comparison to your friend who is probably in a lower tax bracket. So the first reason is income. The second reason is deductions. I always tell people that your tax is based on your taxable income. You are taxed on your taxable income, not the entire total income, not your AGI. So how do you arrive at the taxable income? The taxable income is arrived by deducting a lot of expenses, deductions after your income. So when you look at the tax form, you're going to see the AGI, which is the adjusted gross income. Then you're going to see the deduction, which is either the itemized deduction or the standard deduction. Before you get to the QBI, we also have the QBID, which is qualified business income deduction, and then before you arrive at the taxable income. So your tax is based on the taxable income. Now, for those that have higher deductions, which could be whether you have a business, you will have the qualified business income deduction, and then you will also have the standard deduction or the itemized deduction. If your deduction is higher than your friend's deduction, or your friend has a higher deduction in comparison to you, then your taxable income will be lower, and it's also going to impact your eventual tax that you are going to pay. Now, let me take that back into the conversation. So if you are an individual that has a higher itemized deduction, the itemized deduction are expenses that includes your country, your charitable donation, mortgage interest, state and local taxes. It also includes your out-of-pocket medical expenses, medical premium and dental premium, and casualty losses. So all of those make up the itemized deduction. If your itemized deduction is lower than your standard deduction, then your tax preparer is going to use your standard deduction. Now, when you're comparing yourself with your friend, if your friend is itemizing and you are using the standard deduction, then there is a high chances that your taxable income will be higher and your tax bill will be higher and your tax refund will be lower. So again, your deduction determines how much you pay in taxes because it impacts your taxable income and also impacts your tax liability. So again, another reason why you don't want to compare, why you cannot compare, is that the tax bill, the tax deduction is different. If your friend is itemizing and you are doing standard deduction, obviously, even if you have the same level of income, you're going to arrive at different level of tax liability. The third one is your withholding. So we all know that at the end of the day, we still have to pay taxes. If your withholding is lower, perhaps your friend has been withholding enough, or maybe they've done their estimated tax payment every quarter, so they have prepaid their taxes for the year. If that's the case, and you have not done that, if your withholding is lower in comparison to your friend's withholding, or if your withholding is lower and you did not make any estimated tax payment during the year, then your prepaid taxes during the year is already short of the level that it should be. You've underpaid taxes during the year. And so even when you're comparing yourself with your friend that is on the same income bracket or income level with you, if they have paid more taxes during the year, they are going to get more refund. Their tax liability is going to be reduced in comparison to you that have not paid enough taxes during the year. So the third one is withholding. So another reason why you cannot compare is that you don't know how much withholding that individual has paid during the year. You don't know if they made quarterly estimated taxes. You don't know if they made enough withholding during the year. If you have not done the same thing, then you're not going to get the same result when it comes to your tax liability or your tax refund. So that's the third one, is withholding. Then the last one I'll talk about is credit. So we all know that the credit is another way where you can reduce your tax liability. Now, I know a lot of you confuse credit and deduction. The credit is a dollar for dollar deduction. So what credit does is that if you have a tax liability of $5,000 and you have a tax credit of $5,000, then your tax bill is going to be zero. The credit is going to zero out, is a dollar for dollar deduction on your tax liability. While a deduction is a percentage of your, it's going to save you a percentage of your tax bracket. So credits are better, if you ask me, credits are better than deduction because it saves you more. Now, and that is why credits are based on income level. A lot of the credits that are out there are only available to certain individuals that are either within a lower income tax bracket, or they are you're eligible for that credit either because they have children, they've paid tuition, or they've done some other investment that enables them to take that credit. Now, when you have a credit, or when your friend has a credit that you don't qualify for, it impacts your tax result, it impacts your refund. So let's say, for example, your friend has 4 kids, or someone that you're comparing yourself with has 4 kids, and you have 2 kids. Even if you are on the same income level, you earn the same amount of money, at the end of the year, your tax bill will be different, because while that individual is able to get a child tax credit of $8,000, you are only able to get $4,000. So by so doing, they're already ahead of you to about $4,000 more in credits than yourself. So if you are on the same income level with that individual, while they get while you might be getting a refund of, say for instance, $1,000 or $2,000, that individual is going to get a refund of about $5,000 because they have 2 kids more than you that is able to get them $4,000 extra in tax credit. So those are the things that you need to consider. And so outside of all of those things, I also tell people that before you compare, and when clients come to me and ask me, these are when they say this type of things, like my friend is getting more credit, more refund, or why am I owing so much, and all of that stuff, I always tell them that you really don't know what is in that individual's tax return until I can see what is on that tax return. I really cannot explain why they have more refund or they don't owe than you. We've also seen situations where people where some taxes are fraudulently prepared. So if a tax is fraudulently prepared due to claiming losses or overstating expenses, then there's a high chance that individual is going to get more refund. And so another reason why you don't want to compare, you don't know what is in that individual's tax return. Maybe that tax return was inappropriately prepared. Maybe they've overstated expenses and things like that. So you just want to focus on your own situation. You want to focus on your tax return. If you have any questions with your tax return, ensure that you're asking those questions to your tax preparer. Let them know that these are the questions that you have. The conversation I have over the weekend, I'm really so thankful that that individual reached out to me, because we spoke about it and I gave her several examples, several reasons why your friends might be getting more than you, or also shared some of the instances where we've seen tax returns that were, yes, they were, huge refunds, but we also realized that some things were added on that tax return that the taxpayer did not know about. So you have to be careful that, there are certain instances where you're not supposed to get the same result due to the different situations, unique situations of each individual taxpayer. If you are currently looking for a tax preparer and you want someone that would explain things to you, that would not, um, you know, ignore your messages or your calls, someone that would explain things to you in ways that you would understand and will get you out of IRS problems, someone that will not expose you to tax audits and IRS issues, reach out to us. We are currently accepting clients for this tax season. The best way to reach out is to click on the link in our now on our platforms. You will see the link that goes to a form that you fill out, and a member of our team will reach out to you. Thank you so much for joining me, and I will see you next time. Bye.